Hello and welcome to another exercise in which we're going to look at a bank reconciliation statement. In this particular exercise, we have DS Entertainment, which gives us their cash account, what has happened in their cash account during the month of May, and also their bank statement. We've been given two pieces of information over here, additional information. They've asked us to prepare the bank reconciliation statement on May 31st, 2021, and prepare the necessary adjusting entries. We'll get to that later on. So to start with, a bank reconciliation statement, as you know, is an internal document. We do not share this with anyone outside the company except our auditors. However, it's a formal document that's prepared at the end of every month. So for all formal documents, we need to have a header. And the first line of the header, we're going to write the name of our company, which is DS Entertainment. Second line, we identify what statement it is. It's a bank reconciliation statement. And the third line, we're going to write the date on which it has been prepared, and it's May 31st, 2021. So with that information in place, let's take a look at what we need to do. We need to reconcile two numbers. Okay, so let me just show you how I'm going to work with some of this information. I need to reconcile. As per my cash account, I have 5,100 on May 31st. The bank statement is saying May 31st, I have 6,210. So obviously these two numbers are different, and we'll see how we reconcile these two numbers. So let me go back over here and use that as a starting point. The balance as per our books, as I just told you, is 5,100. The balance as per bank is 6,210. So that's a starting point for the bank reconciliation statement. Look for the ending cash balance, what we have in our books and what the bank says we have. Now that we have that done, let's take a look at the cash account. The cash account is telling me what cash receipts I have. So I have various sales, and the amounts that we have over here, obviously we're depositing it into the bank. And we've made various payments. So I need to reconcile that all the cash receipts I have do show up over here in the bank statement. So here's what I'm going to do. Once again, I'm going to take a look at I'm going to use my pen over here. And an item that appears in my cash account and the same item in the bank account, I'm going to strike those off because I do not need to worry about it. So 1460, a sale that was deposited, so I'm taking that out. I don't need to worry about it anymore. The next item is a sale for 1890, and that shows up over here, so I take that out. Again, the third sale, 2520, I see that 2520 over here. And then I have a sale for 2990. And then if I look over here, I have the same amount there, so I strike that out. These are all, as you see, DEP stands for deposits that were made. Now here I have a sale that I made May 31st, and I've deposited the money according to me, but the bank says we don't have that as yet. So this is a number that I will have to reconcile. Okay. Next, let me look at the payments that I made. Now the payments I made are all by way of check. I have check numbers 471, 72, 3, 4, 5, 6. So I've written out 6 checks. Here are the amounts. Let's go and look at our bank statement and see if these checks have cleared. So 471 is for 1,300. And here you'll notice I have 2 checks, 469 and 470. These seem to be old checks. We'll get to that in a minute. So 471 is 1,300. Yep, that's cleared. So let me draw the line across properly here. So this one has cleared the first one. The next one is property tax, 1,670. That's over here, so I can take that off. So the second one is also cleared. Then 473 was salaries of 3,600. That's here, so I can take that one off as well. And then I have 474 is advertising, 1,500. Well, that's there too, 474, 1,500. Okay. So now all of these checks that I've cleared, I've drawn a line across them, which means I do not need to worry about them. I do have two checks over here that I wrote out in the current month, 475 and 476. These were for supplies and salaries. And you will see those checks don't appear over here. Now there is the similar amount, 550, the same amount actually. However, that's a different check. So we can't cross these off over here. So again, these are numbers. I need to come back and reconcile. So now that I've seen this, I've looked at what deposits I made, what payments I made, and numbers that did not clear according to me. I have done this. I added 3180 in my books. I subtracted 550 and 3600. Those don't show up in my bank statement. So those need reconciliation. Now, before I proceed to explain what else is out over here, let's take a look at the additional information. They're telling us that the difference in the beginning balance in the company's records and the bank statement relate to checks 469 and 470. That's these checks. Okay. So let me go back over here for a second. And here I'll write down what I have. Difference in beginning balance. Okay. What do I have over here? I have 52, and the number is over here, 5280. The bank says I had 62. The bank says I had 6260. And if you look at the difference between these two numbers, so I started the month with a difference of 980. And they're telling us those were these two checks, 469 and 470. So let me write that down over here. The checks outstanding, 469 and 470. What were those amounts? 550 and 430. Where did I get those numbers from? I got those numbers from here. When you add those up, you will see it's 980. So my beginning balance was different. I said I had less money than the bank said I had. And that's because there were two checks that were outstanding. I said I wrote them in April, but they're now cleared in May. And those numbers add up. So I can take that off from the list here again. So again, let me do that. I will take these numbers off, which means I don't need to worry about it. Okay. Now that I'm done with that, again, I have identified these numbers over here. And let's see in the bank statement what else I have that I need to look at. In the deposits, this is money they've added to my account. They have done a note collection. They've collected on a notes receivable for me, $1,100, and $60 interest on that. So that's something I need to do in my bank reconciliation statement. At the end of the month, I also got $30 in interest from the bank. That's my interest based on the money that I have in my bank. Then let's look at the withdrawals. This is never good. I have a NSF check. NSF stands for non-sufficient funds. So here what happened is a customer gave me a check for $400. I deposited the money in the bank. I gave the check to the bank and I said, cash debit, accounts receivable credit. The bank is coming back and telling me, nah, your customer didn't have the money. So they took that money out of my account. So I need to bring that into my reconciliation. Then I have this electronic fund transfer, EFT for 600. Well, did I authorize that? If you look at the information over here, let me come back over here. And if you look at the information over here, the second additional information, they're telling me the bank made the EFT on May 20th. That's at May 20th. In error, the bank made a mistake. The bank accidentally charged DS, that's me, for payment that should have been made on another account. Okay, so this money, this EFT of 600, they have withdrawn from my account. Obviously, I found this mistake. I called the bank. Now the bank has to put it back into my account. Okay. The bank has also taken out $50 from my account. So this $50 is service fees. Anytime you're not sure of these acronyms, look over here at the bottom. They will tell you what it is. SF is service fee. So maintaining my account, I have to pay $50 a month for it. Okay. So now all these items that I've circled over here on both my account and in the bank statement, I need to do the reconciliation. And let me show you how we do that. Okay. So I'm going to add and subtract certain items. Again, it's fairly simple, and I'll tell you how it is to be done. Okay. So you can always start on this side, the bank side. Typically, what you're going to do is you're going to anything that we have done and the bank has not done, that's what we're doing on this balance as per bank side, the adjustment. We are saying we added 3180. When the bank clears that check or the deposit, whatever it is, that money is going to come into my account, 3180. We made 2 payments. Those are checks outstanding. Checks outstanding means I wrote the checks, they're outstanding, they've not yet cleared the bank. And when these checks do clear, and you see over here, I'm writing down the check number. It's a lot easier for the next month for me to track these checks. So these numbers, when the bank clears the check, when they clear the bank, they will get subtracted from my account, which is why I'm putting those numbers as minus. Okay, so I've taken care of 3180, 550, and 3600. Those are the numbers over here that were pending. I took care of them. Now on this side, the bank collected 1100 for me on my note. Someone owed me money and they put the money into my account. So that's notes receivable that's collected. That's 1100. It's added to my account. And the $60 interest that was collected, that's also added to my account. That's on account of the note. Then I have another $30 I earned in interest. That's also added. That is also interest revenue. So those are all added. So now I've taken care of these 3 numbers. Now let's move on to this side. Remember that NSF check? That's a bad check that a customer gave me. So what happens? I need to subtract that money from my account because I don't have it. I thought I had it. I added it to my cash. Now I'm saying, no, I need to subtract that for $400. So I need to take that out. Now, obviously, I'm not going to eat that loss. This NSF check, I'm going to ask that customer to return the money to me. Okay, so we'll see how we're going to take care of that. Then we have the service fee, $50. The bank took that money out of my account already. They're not going to ask me for it. They're not going to send me a bill. They're taking that money out of my account. Okay, that takes care of the 400 and the 50. What about the 600? Remember we said the $600 is a mistake the bank made. So on the bank side, we need to enter that information. They took money out of my account by mistake, so they need to add it back. So under the add, I'm going to write bank error, and that's a $600. At this point, I've taken care of all the information that was given to me. Now, if I've done this correctly, which I hope obviously I have, I will come up with what's called the adjusted balance, or sometimes called the true cash balance. And this is the number that gets reported in the balance sheet. So add up all these numbers on each side. Balance as per our books was 5,100. When I add these 3 numbers and subtract 2, what I end up with is 5,840. Now do the exact same thing on the other side. 62,100, add 3,180 and 600, and then subtract these 2 numbers. You should come up with the exact same number. If you didn't, you made a mistake. The bank reconciliation is incomplete. You need to go back and look at it. Okay. So that's one of the really cool things, that when I complete this process, I will get the exact same number on both sides. When you're doing your homework assignment or on a test or a quiz, if you ask this question, the bank reconciliation notes that balance as per our books, the adjusted balance is 5,840. What is the number for the bank side? The answer has to be the same, 5,840. So if you've done one side, doing the other side is easy. You have to come up with the same number. Now that we've done with our bank reconciliation, what next should I do? Let's take a look at this over here. I cannot just change a number that I have in my ledger, 6,200, 6,210 to 5,840 without doing a journal entry. So what I need to do is I need to do what's called adjusting entries. When you had gone through the previous chapter and talked about adjusting entries, we had learned that we never debit or credit cash in adjusting entries, unless there is one exception, and that one exception we're taking care of now, and that's the bank reconciliation statement. Now, these journal entries obviously are happening on May 31st, 2021. These are the ones that need a journal entry. So we have these numbers and these numbers. My apologies. It's on our side, the balance as per books that we need to do the journal entry for. We need to move the number from 5100 to 5840. So let's see how we do. When you see the word add, it means cash is debit. Okay, so I have cash debit. I'm going to credit note receivable. It's an asset I collected. It's no longer in my books. I need to credit it to take it off my books. And that was 1100. Interest revenue collected is 60. That is interest revenue. So we credit interest revenue. So the total cash that the bank collected was 1160. Now, if you look over here, that happened on the 20th, May 20th, but we are doing the journal entry on May 31st, and that's just fine. You don't have to go back and do it on May 20th. You can do the journal entry on May 31st. The next one, we're looking again, interest revenue. This one is easy. You're just going to write cash debit, interest revenue credit, and the amount is $30. Once again, where you see add, cash has to be debit. So obviously, what does it mean? Here, cash is going to be credited for these two journal entries. Again, both these entries are done on May 31st. All 4 entries are done on May 31st. The NSF check, cash is credit $400. Okay. Now, if you were working on an exam, homework, any quiz, write down at least this: cash credit 400. You know cash is credit 400, even if you don't know what account to debit. I'll tell you what to debit, and the amount is 400. This was a customer who gave me a bad check. I'm going to ask them to give me that money now. So it's basically accounts receivable debit. I'm bringing them back into my books and saying they owe me the money. Accounts receivable debit 400, cash credit 400. Service fees, again, the journal entry is easy. I'm going to start with the credit. Credit is cash. And the account you're going to debit, you could call it service fees expense, operating expense. There are various names that are used. I like to use the miscellaneous expense because that's what most companies do. They add up all these numbers and call them miscellaneous expense. If you called it service fees expense, that's fine as well. So I hope this gives you an idea as to how a company would do a real bank reconciliation statement at the end of each month.